Alrighty, guys. Good morning. Welcome to this Monday, July 14th. And yes, I have a crazy morning dog going on here. If he yipes at you, just take it with a grain of salt. That's just him. Anyway, so good morning. July 14th it is, middle of the summer. And it looks to me like you had a little gap down here in the overnight. I guess the tariff discussions are on the table again. So there is some news about Mexican tariffs or European tariffs. I think it's the bigger one coming on being levied by August 1st. So again, trading going back and forth. I guess the trade talks to the European Union is not going so well or slow or dragging out, but that's it. That's when you talk to bureaucracy, that's what happens. So I guess he's prodding them along. So anyway, so tariff news, market small gap down this morning and in the overnight, and so far they kind of retraced part of it. We'll see how that shakes out. The news starts this week as well, and I think on Friday, I believe we start getting the earnings reports. It's going to be interesting. So next few weeks is going to be all earnings reports and tariffs. Excuse me. But to get started this morning, looking at the ES. Let's diving into this thing. Let me cover the news a minute, take a quick peek at the news. No, nothing going on today in terms of news. Tomorrow we get the CPI number. Wednesday we get the PPI number and industrial production, jobless claims, retail sales on Thursday. Friday's pretty light. So you got news coming out throughout the week. I think Tuesday, Wednesday, Thursday all are pretty decent news days. So, but on this Monday, not too much. So we're gonna have to just take that with a grain of salt. So starting off range bound at this point, given the gap down, I think the momentum to the upside definitely stalled after Friday's little pullback and little hesitation. And then, of course, the gap down and going into today, we are firmly right back into this attractor area at the 6270s, backing off from the 63s. So we are building value. We have a pretty well-defined range, 62.25 up to that 63.30. And that we are pretty much in the middle of it. So I would start off flat out range bound, fade the edges fairly equally. It's light volume trading. Market's going to be prone to react to headlines, tariff news, and so on and so forth. So just watch for that. But otherwise, I would look to sell strength up to that 63.10s, maybe 63.15. I would look to buy weakness. Well, actually, I would sell strength all the way up to the 63.30s. But once they start taking out these 63.10 and 15, I think we have a potential direction developing. So I would start leaning in on the long side a little bit more, a bit less aggressive on the short. But the initial range, I think up to that 15s are pretty good. And on the way down, looking to buy weakness, the 62.60s, 50s, 40s, 35s down to the 25s here, where the 25 and 35s are the better support areas. But I would buy it all the way down there. And then below the 25s, I would start thinking about potential moves lower or breakouts to the downside. So on the downside, they start taking out that three-letter edge, start getting into those single prints. I think we have a shot at retracing it all the way down to that 61.50. So we'll see. But that move to the upside, based on, I think we ran out of tailwind on the bills and all that stuff going on. And we're pretty much in the range right now. So starting off range bound on the ES, looking to sell strength, 62.80s or 85s. 62.95s, 62.10, 63.10, and 63.15s for rotations back down. And looking to buy weakness, maybe not the 75s, that's pretty aggressive, but it is an edge. But I would probably look to lean against the 62.60s, 50s, 45s, 35s, 25s for rotations back up again. So that's kind of the dynamic right now on the ES. So range bound trading to get started this Monday. Volume-wise, 150,000 on the micros, on the ES, 100,000. So maybe pretty much in line, a little bit on the high side, but not by any means anything outside the normal. Looking at our NASDAQ and the bonds. Bond market is pretty much in a let me see if I can find a bond chart. Yeah, pretty much in a range. Down here, drifted down to the lower end of the range again. So we're down here at the 112. So I took out this right now after drew my edge right here at the 1220s. I just took it out. So we may see the bond market probing down in the 111. See, you can probe these 11 to 11, 111 to 112 edge. It tapers off pretty good, but you said below the 112, so it really starts tapering off. So I would look at the look to buy against the on the way down here at the 112.04, 112, 111.30, this area of support. But initially, we are primarily range bound when it comes to capital flow. So I would start off on the short side, given the overnight, and see if they can run it down lower. If they start taking if you see a continuation on what they're doing now, we probably are heading lower, at least to test the 1210s or 4s, 1130 to 112. And I would look to buy against those areas for rotations back up, maybe even down to the 1126s. So this little cluster of support areas, definitely look to buy against those for rotations back up. But right now it feels very much that we may have a probe to the downside going on. Now, if they can't keep going from what they just did, then go back range bound. This little probe to the downside. If that gets reversed, just go back range bound. But at this point, if we get early strength, looking to sell against the 1228 up to that 1302. So, but that's about it. About 1302, so yeah, yes, flat out range bound. But let's see if this little momentum to the downside keeps anything going. On the Nasdaq, also moved the gap down a little bit. Retraced most of it. They're back in the same range as yesterday's day session. So not a huge gap, but that's typical reaction to tariff news. But they're right here at that 800 support area. They were down here for a bit. They bounced off it just a little bit, but they start trading. They're pretty much in the range, same as the ES. The lower end of that range, I would say, is down here at the 590, 600. So if that comes out, that's when I start worrying about the short side and a bigger retracement, bigger correction. But at this point, if they run down here, test the 600, yeah, that would be a rough day, but it's still pretty much trading in a range, and the range is pretty wide. So between 22,600s up to the 23,000s, 23,100s. So it's a good 500-point range we are trading in. We'll see if they narrowed it down a little bit, but so if they take out the 800 to 820s, I would potentially look for a short move down here to that lower edge. That could be a nice short trade to look for, but at this point, that still just keeps us in the range in the bigger picture. So early on, looking to sell strength, trading it pretty much in a range bound at this point. So I would say looking to sell against the 890s, 920s, 970s, 23,000s up to the 23,050s for rotations back down. Above the 50s, I would start thinking about the long side, see if they can run up, test the highs, maybe take it higher. And looking to buy weakness, not going to be super aggressive against 850, but the 800s, 775, 740, 680 down to that 630. And looking to buy all the way down there against these support areas. You have the 590s here. So this area here, the 590s up to the 630s. Here's the lower end of that range. Both of these comes out, bets are off, and we are heading lower. But there is a fair amount of range. So I would say if they start taking out this area, the 800s, I would maybe give it against the 775, these two support areas. If that comes out, I would look for a move to the downside and try to get short to see how far they can take it. Just be mindful, don't get short into support. Look for them to break out outside of that. But at that point, I would be looking for them to run it all the way down here to that 600 level. So range bound. At this point, it could go either which way. So you can run it down on the F1 down to that 590, 600, which we just talked about, or running it up to the 23,100. I think chances are that we're going to see more of weakness coming up here this week than anything else. It could be a headline coming out which sets the market up, of course, but it's at this point they're backing off that upper edge, and I would be kind of looking for weakness instead and see if they can take it lower. All right, so that's the Nasdaq. We have a pretty wide range on that guy, as you know. So initially, the first levels to pay attention to is going to be the 890s, the 920 to 30s, 960s, 23,000s, and looking to buy against the 860s with a bit of caution, but the 800s, 775, and 730s. So that's in the range, I think, and we could initially look at. Outside of that, we may have a direction moving, but still look at the fade edges back to the mean. All right, so that's the Nasdaq. We get started. Oil and gold. Oil is heading higher. So here we go. I think this it's more have to do with what's going on with Putin right now in Russia. I think that's what's driving it. The fact that they're not going anywhere, they're not getting anywhere there, and it's the guy is just giving Trump the middle finger is what's probably behind this. So I would say that we are pretty much in a spot where there are going to be some sanctions and stuff like that come on, and that potentially could spike oil in the short term. So I think that's what's going on here. But the Middle East war came off, boom, everything really crashed. But now we have the Ukraine-Russia situation. So if they're going to keep arming Russia, and they're going to do something with energy because that's how they're gonna get his attention. Once they drop prices of oil way down, you're probably going to see a whole different scenario when they can't pay for the war anymore. That's how they did it last time. It's all about energy. You have to run the energy down into the ground. Cheap energy benefits a lot of people. It also kills those regimes which are reliant on that as their only source of income, especially when they are acting poorly. So anyway, so I would start from the long side on oil, looking to buy weakness, 69, 68.75 down to that 68.50s. If they trade below that London low, I would be back range bound. But I mean, initially looking to buy against these support areas for rotations back up. Not going to be super aggressive on the shorts. I think we'll see how far they're going to take this higher. How much, I mean, how these sanctions or potential, should I say, actions by this administration is going to impact oil prices in the short term as they try to get Putin's attention. Gold is pretty much on the upper end of this. They have taken out that 68.70. I think they're still in a good spot to take this higher. Let me see a capital flow on gold. All right, so they are up here. Taking a move, almost like a move out of the middle to the upside. I haven't quite cleared the upper edge in this the prior edge of this prior distribution. So that kind of borderline right there. So they are right at that 670 edge, that 4 letter edge. They probed higher in the overnight, backed off. It could be a reverse retest right now against the 68.70s, and if so, we may see them take it higher. I would look to buy against the 68s, 61s for rotations back up. If they're back below 60s, 61, I would think they're heading right back to value again. So that's kind of the way I'm looking at it. So following this together, you can see a nice distribution right here. Tractor area is going to be at the 33.30s to 40s. And right now they're probing this upper edge. If they can't, if they trade below that edge, the 69.70s, look for retracement back to that mean. That would probably be more the likely trade. The only caveat in that is really the Russia-Ukraine situation. If there's something brewing there, which can lead to some flight to safety, you may see gold keep spiking a little bit. So, but watch that. Initially looking to buy again 68, 69, and 60s for rotations back up. And not going to be very aggressive on the shorts, though. Shorts could set up at 76, 82, and 87s for rotations back down again. All right, so that's oil and gold. Fairly straight around. I would say start with a long bias on gold, long bias on oil. ES and Nasdaq will start off flat at range bound. And for both of those, I'm actually thinking a little bit more on the weaker side of things, but we'll see. It is range bound and it's kind of news driven right now. So I would be just trading it as a range bound primarily, then see if I see some direction developing. All right, so that's pretty much it, guys. We're wrapping it up for now, and we'll see you guys back at 11:30. So good trading. I'll see you back then.